go ahead, Bret, and bring up your slides and then just go in presentation mode on that, and we will. And there we go. Perfect. Just like that. There we go. All right. Excited to hear all about Guardian Health.
Wonderful. Thank you very much for the opportunity.
Make sure you go back to the slide. You got to keep the slides open on the screen. There you go.
Okay. Thanks.
Yep. Perfect.
Really appreciate the opportunity to talk to everybody today, and want to thank the Benzinga team for that opportunity as well. My name is Bret Scholtes. I'm the president and CEO at Guardian Health Sciences. I've been with the company since January of this year. Prior to joining Guardian, I spent 10 years at Omega Protein, which is another nutritional products company. 9 years as the CFO. 1 year as the CFO, 9 years as the CEO. The company was, like I said, traded on the New York Stock Exchange. We sold it to a private entity, and then joined Guardian to look forward to building up another nutritional product company. So I'm going to take the next 20 minutes and just walk you through what we have going on with the company. I think we're at the early stages of something that's pretty interesting. I'll skip over the forward-looking statement, but would encourage everybody to go back and read that. For those of you who are not familiar with Guardian Health Sciences, we're a clinical nutrition and diagnostics company. We offer a portfolio of science-based, clinically supported nutritional supplements, medical foods, and diagnostic products. And the company really changed in June of this year when we acquired the Viactiv line of supplement chews. And I'll go into that in a little more detail, but I want to make sure to point out that I think there was an inflection point that occurred in June, which really fills in a lot of the gaps that we have as a nutritional product company. On the right-hand side, you can see some of the statistics. For those of you who are not familiar with the company, market capitalization just over about $31 million. The share price, and this is pretty consistent with where it is this morning. About $1.28. We had 24.4 million shares outstanding, and as you can see, it's a 52-week range. We are trading towards the bottom end of that, despite a lot of positive things that have been happening with the company over the last few months. The cash balance and short-term investments at the end of June was $12.5 million, and we'll go through that in a little bit more detail, but it's a little bit lower today. The company does not have any debt on the balance sheet. This is just a picture to talk a little bit. I made the comment that the company changed in June with the acquisition of Viactiv. Pre-Viactiv, Guardian was absolutely committed to the clinical side of the nutrition world, invested in science and clinical work, had a strong scientific advisory board that was guiding the company, spent time educating doctors on our products and how they work with the body, primarily on the ocular side of the business. That said, did not have the commercial success that we think is possible. With the acquisition of Viactiv in June, we think that we filled in a lot of those gaps. Viactiv, with the acquisition, we entered the bone health segment. We acquired a strong brand with extensive distribution channels, marketing experience, and the ability to combine the efficacy of a product with a good consumer experience. And again, we'll talk more about that. But as a result of this acquisition in June, I think that we've now absolutely had the foundation we need to build the clinical nutrition company that we want to build long term. And the investment highlights that I have on this page will highlight what that looks like, and then we'll go into each of them in a little bit more detail. Large and growing global nutritional market. If you're at this conference, you probably understand that fairly well, but we'll talk about that for a second. It's a market where there's a lot of large companies that dominate, but there's absolutely opportunities for small, nimble, focused companies if you understand the value creation process. I want to talk to you a little bit about how we view that at our company. Next, science-based mindset. We absolutely believe for long-term growth, you need to have products that are based on science rather than just trends that you're seeing in the market. We invest in that, and that's something that we've done historically and will continue to do going forward. We think it's one of the differentiating factors about the company. Next, strong brand name. We'll talk about that a little bit as well. But it's a 20-year-old brand, which we think has the opportunity to expand beyond bone health. The core product has very strong distribution. We think that distribution can aid not only with that particular product, but products that can be commercialized, products that are in development. There's a strong consumer efficacy as well as consumer experience as far as taste goes with some of our products, and we think that that is going to benefit us longer term. Organic growth potential and improving leadership capabilities. These 8 highlights are exactly why I think that we are at the front end of something very special, and I want to take just a couple minutes to walk through each of these in a little more detail. So the nutrition market, $150 billion market in 2020, projected to grow at just under 8% to over $300 billion in 10 years, driven by a lot of the trends that you're probably seeing in other companies that you're looking at, but increasing awareness of the importance of nutrition, especially as we age, growing body of research demonstrating the benefits of nutrition. And then we're seeing an aging population, which again are the ones that can really benefit from nutrition. There's a number of others, but those are probably the 3 biggest drivers we think, and they're definitely drivers that impact our company. So this industry, there's no doubt, you look at the consumer healthcare industry, it's dominated by the pharmaceutical players that have consumer sides of the business. It's you also have the more consumer packaged good companies that are focused on the healthcare sector. But as I mentioned, I think that there's definitely an opportunity for a small, nimble company to play in this if it's focused in the right areas. For us, those right areas are depicted in this chart right here. 6 areas that we put as much of our resources into these 6 areas as possible, and that is understanding consumer needs and then making sure that you take a science-based formulation approach to those needs. Then utilize existing consumer evidence plus supplement it with their own clinical evidence to help understand just the efficacy that the product does have, and then be able to communicate that in terms of strong claims. This is something that the company has had for some period of time. The Viactiv transaction, though, really helps on the back end of this. It's taking that strong formulation, developing it into the right format, the taste and smell profile that you would want, and really having a good product, not only a good formulation, and then finally having a targeted marketing effort to make sure that the product cost effectively gets in the hands of those that have the consumer needs. So that's where we see our opportunity to create value, and that's where as a shareholder you can expect the capital to go into. I talked about the science-based approach. I will skip over this pretty quickly, but the bottom 2 points talk a little bit about how we do utilize science. We do have products where we're just consistently looking at how can we work with KOLs, how can we work with institutions that are in the area to test out the bioavailability of the product. How does it work in the body? How does it compare to other products? We think that that's the basis to making sure that we continue to develop and strengthen the products we have, as well as understand the efficacy compared to the competitors. Next, I talk about the brand. This is you can see the tub of the core bone health product here, and it's this taste meets healthy that has really driven the brand for over 20 years, even when it was part of the Johnson & Johnson family early on. We think that taste meets healthy is an important component to every product that we produce. And we think that because of that, this brand can be extended beyond just brand health. And that's something that we're working on and excited about. The core product is the Viactiv Bone Health Chew. You can see the area, there should be the retailers where it is sold today. Some of the biggest retailers, great distribution. About 5%, a little over 5% market share, which we think is an exciting number. It's big enough to show that absolutely has the ability to be successful in the market. But when you look at a category as big as calcium and minerals, definitely the ability to grow within that segment as well. And we'll be looking to product extensions as well as additional science to help differentiate our product over time. But having this as the core of what we do is very exciting and gives us a lot of optimism for the future. In addition to that core and taking some of the lessons from that core is really the basis for what we see from an organic growth perspective. And organic growth for us is going to be both developing new products as well as commercializing products that are either in the early stages or that need to be tweaked in certain ways to get more commercial success. 3 products I just wanted to highlight here. You can go to our website to get more information on these particular products. But on the left-hand side, the Calcium Plus Immune product, which was just recently launched, starting to gain more and more distribution, which has us excited about the prospects of that long term. And then in the middle on the right-hand side, you see 2 ocular products. These are the products I referenced earlier in the presentation that we think with some changes to the product. It's a really interesting formulation backed by good science. We think we can get more commercial success, especially if we're able to take advantage of some of the distribution opportunities that the Viactiv brand brings to the company. So these are 2 products to continue to look out for when you think about the company. And finally, strong, capable leadership team. I gave you a little bit of my background. I'm not going to, because of the time, I'm not going to go through each individual, but we are definitely putting together a strong team that has industry experience as well as strong functional skills throughout the team to make sure that combined we can make this plan become a reality. There is bios on each of these individuals on our website. In addition, would love the opportunity to schedule a follow-up call with anybody to talk more about our team as well as some of the slides I've presented to date. From a financial perspective, the company is really just starting to get going from a commercial standpoint, and that was with the Viactiv transaction. For the second quarter of 2021, we had $1.2 million of sales. That counted only 1 month of the Viactiv contribution. If you look at first quarter of the year, we had about $250,000 of sales. So you can see that the Viactiv transaction definitely made an impact on the sales. And we're excited for the third quarter when we'll have Viactiv for all 3 of the months of the quarter, as well as going forward as we see some of the highlights we talked about start to work their way into the numbers. From a cash perspective, we had $12.5 million of cash and short-term investments on the balance sheet. While we get this commercial engine going, we are utilizing more cash than we're bringing in. The run rate is probably $2 million or a little less per quarter. That's something that hopefully as we get more commercial success and more of these products come to market, I'm hoping that we can get that cash burned down pretty quickly. But that's where it is currently. And just to give you a feel for what the size of Viactiv is, it's only been in our numbers for 1 month, as I mentioned. Last year, it did just under $12 million of sales and just under $1.2 million of operating income, but good growth rates. So we're extremely interested in what that could do for the company and also how it can spur growth in other areas for us. The priorities that we're looking at are, I think, to put them into 5 main categories. I talked about the brand strategy. We think that the Viactiv brand is large and can do a lot more than just bone health, and we think that can drive our organic growth strategy. And so we're doing work to understand just where the limits would be with that. From a product strategy standpoint, I talked about the different components that we think you need for a successful product. We'll be going back through our products to understand how we can improve, taste, so the formats or other things that we can do to differentiate the products better and get more commercial success. From a sales channel perspective, we'll be looking at how do we get more of our products into more distribution channels, as well as looking to open up new distribution channels. For example, direct to consumer is a very small part of what we do today. A lot of what we do today is traditional retail, but we have seen e-commerce start to be a larger and larger part of our business. So Amazon.com, Walmart.com have been growing at a good pace. And like I said, there's the ability to open up a direct-to-consumer sales channel as well. From a portfolio and business line perspective, I 100% believe that you have to be focused in areas where you can create a competitive advantage. And if you cannot create a competitive advantage, you have to really think hard about whether you should be involved with that. And so we're currently going through the process of looking at our portfolio and business lines to evaluate them and make sure that each of those areas can create a competitive advantage and is deserving of our shareholders' capital. And lastly, from a scientific perspective, we'll look to continue to do work on our products. So from how do those priorities turn into actual items? I think over the next few quarters, you can look for a few things. First, improved communication channels. As some of these priorities turn into strategies that are executed upon, you can look to us communicating that so you can track our progress besides just looking at the financial progress. We'll be looking to complete and implement the business unit line review I mentioned. We'll also be looking to roll out new products, and so hopefully there'll be some launches that you can track along the way to track our progress on an organic growth standpoint. There are going to be opportunities to continue to be more efficient with what we do and optimizing internal processes. And so I can promise you that we're spending time, really looking at everything that we're doing and whether it's something that is adding value or not. And if not, getting out of that. You can see us continuing to ramp up our commercial activities and expanding our current business lines, as well as implementing improved commercial systems and potentially acquisitions. So I appreciate your time today. Again, these are the highlights of why I think it's a really interesting time to take a look at Guardion Health Sciences. And finally, I'll show you, this is the investor relations contact. If you contact Scott or you can contact me directly, would very much like to set up a time to meet and go through all this in a little bit more detail. I know this is abbreviated, but hopefully at least gives you a flavor for Guardion Health Sciences and where we're going. With that, I will turn it back over. I very much appreciate the opportunity to be with you today.
Thank you so much, Bret. We got time for like one or two questions here, so I'm going to go quick. This is from the chat. When can we expect Guardian's other products to be distributed through the Viactiv channels?
So right now, what we're looking to do is first looking to the format of the particular products, the cost structures, and making sure that they can compete well in some of the other distribution channels. I think that's a 2022 is when hopefully you can see them start to work their ways through those channels.
And there was a question about, let me just get here. The question from the chat, where is Epic V?
Epic V, for some of you who have followed the company, you may be aware of this. This is an energy drink, and it is part of the product development process. It's in that product development process. We are currently evaluating a number of products and when their particular launch dates would be. So from Epic V perspective, it is part of the product development process, but at this point in time, I don't have any particulars about when it'll be launched. But we definitely see opportunities in areas like where Epic V is, and trying to figure out how to launch a product that has the highest probability of success.
All right. There's a few more questions. Unfortunately, though, we're up against the clock here. So, Bret, thank you so much for coming on today, GuardianHealth.com, and thanks a lot for coming on to the Benzinga Small Cap Healthcare Conference.
Thanks for the opportunity. Have a great day.